Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and in this special video, we're going to be addressing one question. Why are mid and small cap shares falling? Now, does it have to do with the latest Sebi directive to Amfi to establish a framework that's aimed at safeguarding the interests of investors in the small and the mid-cap schemes? The heightened regulatory scrutiny comes in the wake of concerns that these share segments, particularly the mid and the small caps, look overheated after having rallied 50, 60, 70% odd over the last 1 year odd or so, while investor flows in these schemes also continue unabated. The regulator has, in its recent communication to the Association of Mutual Funds in India, has asked these fund houses to list the number of steps they are taking to protect investors. Now, in case you are an investor of mid and small cap stocks, or you also invest in mutual fund schemes of mid and small caps, this is a video that you should watch, because joining us on this very special edition is a very special expert. Virendra Kumar joins in, CEO of Value Research. Good afternoon, sir, and thank you so much for taking the time out for this very important discussion. What we have seen is, just after this news flow came in, the mid and the small cap segments of the stock markets have been reacting or downwards. About 2% odd or so of a loss in both these segments has been witnessed in just the last 2 to 3 odd trading sessions. First up, help our viewers really understand, what has Sebi asked Amfi to do? Why has there been a concern? And what does it mean for the associations of Amfi, the mutual fund scheme owners, the broking houses that run such schemes?
Sebi is getting concerned that small cap funds, in fact, it is a very surprising move, because it has never been Sebi's business to tell people that this is risky, this is dangerous, and it is telling the fund companies that the exuberance around small cap funds or small cap stocks will be getting into a territory where it is getting concerned, and it wants to just prompt alert the fund company. It's almost like you have this flood alert happening, but many a times you have a flood alert, but it never happens. Likewise, but there is a possibility. So, and it is better to be cautious about this. And what this means is that, alerting them, sounding people, and just in case there's extreme volatility. And to understand the dynamics of small cap, they are extremely volatile. This is a very volatile asset class. And fortunately for investors, they have not seen the volatility. In the last 5 years, the small cap funds are up 54% annualized. Mind you, which means if you invested 5 years ago, your money is becoming 1.5 times every year for last 5 years.
Wow.
This is extraordinary. And this is what, so many investors who have come into the mutual fund and doing their SIP, they have not seen the downside of it. They think that, they're beginning to believe that it only goes up. That may not be true. And if they are faced with this, and whenever the decline happens, it will always be very sharp. Why it will be sharp? Because the small cap stocks are not held by FIIs. Promoters of these companies still own on an average little over 50%, or all the good small caps, they own much more. Second is that, even domestic institutional investors, the NPS money does not get into that, because that is meant for BSE 200, top 200 companies. Likewise, the EPFO money which gets into stock market does not get into this, because it gets into Nifty and Sensex ETFs. So small caps is largely dominated by participation of mutual funds, small cap funds, which have done very well. They are getting a scale of money which is unprecedented, and a lot of small cap stock investors. I would not call them as investors; they are speculators. who have come into the market. Investing in market has become so easy, and they think that it's an easy way to make money, and that is where, and the universe of the stock universe for mutual fund is just about 500 stocks. But the universe of a small cap for Indian investor that is available is nearly 3,000. And we should not forget that whenever there is a sharp decline, small caps, fall more freely, they crumble. We should not forget, I'm just peeping into history, that in 2008, after the global financial crisis, everything went down. The large caps, the big indices also went down by 40-45%. But many small cap funds went down by 80%. Imagine, your 100 rupee turns into 20. And it did make a comeback. It did make a very sharp recovery thereafter. But the 80% decline in the value of your investment is very unnerving. So this alert from Sebi is just to sensitize. And let me tell you one more thing, that despite all this alert, nobody can do a damn about it, because all kind of risk assessment, anything that will be done, whenever it crumbles, there is no other side. So something can be done, little bit can be done, but it is all investors of mutual funds should remember that they are subject to market risk,
Yeah.
and keep your long-term orientation while investing in these investments. If you have been lucky in the short term, count your blessings.
Count your blessings. So clear risks that have been highlighted here. Of course, these spaces have had a dream run over the last 1 year, and delving into history, you did talk about how in the small caps last 5 years, investors have actually seen their money grow by 1.5 times each year. So that's a substantial amount of money that has been garnered by investors, and there always comes a time, because the markets are not linear, they only do not go up. Whenever there is a risk, there is also a risk of downside. So what has Amfi now recommended to the mutual fund schemes, to the mutual fund companies now, sir?
Uh, it will just call a meeting of fund CEOs and fund managers, and ask them that they should be a little proactive about managing risk. Let me tell you that there are provisions in the design of the mutual fund, like small cap fund. When we talk of small cap fund, they are supposed to invest only 60% in small cap fund.
Okay.
Also, 60 and remaining could be in more liquid large cap stocks. So just in case a fund is facing, because you have to really prepare for a sudden decline. And this Amfi notification, or this communication is very specific, that whenever such a panic happens, or such a panic is witnessed, the investors who run away first are the ones who benefit, and the remaining investors can suffer. And that small cap funds could be more vulnerable, because the fund manager will sell what is sellable, and what they will be left with will be completely illiquid. And the risk of illiquidity in a small cap, in a adverse climate, is more severe. And the price impact when you are doing a distress sale could be very damaging. So with that in mind, I think they are just trying to prepare themselves, that if they are faced with any temporary situation like that, what they should be doing. The first and foremost, I can think of 3-4 things that they can do.
Sure.
One is that have the maximum allocation to non-small cap that is possible, even among small cap, because now some of the funds are becoming very large. It's very difficult to imagine that how a fund manager will be struggling every day to manage a fund which is which is witnessing massive inflows, and it is a 40,000 crore fund, 30,000 crore fund. We have never seen it in the past. So having as much non-small cap as possible, how much have as much of relatively more liquid mid caps and larger small caps possible. Then comes putting the gates down. Many funds are beginning to put a gate on their funds, new inflows. So one-time investment in such funds has been restricted, and more and more funds will be encouraged to do that. The final thing, which I think which every fund investor should be willing to embrace, or should prepare themselves for, because this is a very unusual situation. We are witnessing exuberance in a segment of the market which can face great illiquidity. And
Correct.
if a lot of investors turn up to take their money out in a panic, if all fund companies should prepare themselves to stop the gate, because that could be damaging for everyone. And how to do it, because it's a very delicate thing. Everybody is used to getting their money back from an open-end fund anytime.
Yes.
So if any temporary, any restricted, any such restriction has to be done, it has to be done in tandem so that because and nobody is going to do it voluntarily. So there will always be a risk of who will bell the cat, because anybody who bells the cat, he will be faced with lot of bad bad PR, public relations. So or it'll be perceived as a very risky business decision. So these are things which investors should worry about. But I would still urge most investors that if you are a long-term investor, if you are
Right.
doing your SIP, just keep calm and carry on and ignore this.
Okay. Okay, so that's a very valuable advice coming in. In case you are a long-term investor in any of the small cap schemes that you have been investing in via the SIP route, you should continue. Ignore in the meantime what has been instructed, because your goal is a long-term goal and not a short-term goal. That's
Yeah.
extremely important. The second point you did talk about with respect to the mutual fund schemes and the mutual fund companies is that the options that are available in front of them is with respect to either shift some flows, tell me if I'm correct, from
Yeah, yeah.
60% that
Restrict
you
some
are,
flows. Yeah.
okay, shift some flows from small caps to maybe large and large mid cap funds to restrict. Secondly, they can actually restrict investors from making lump
Yeah.
sum investments in the schemes right now because of this directive. So that could get affected in case you as an investor may be looking at making a lump sum investment in a small cap scheme. There may be some kind of a disruption there. So keep an eye out on that. But the SIPs will continue, sir. Could you give us that clarity in case
Yes.
somebody is a long term? Yeah.
Yes, yes, very much. All the funds who have actually stopped taking their one-time investment, they are continuing with their SIPs.
Okay.
And even when the fund companies have stopped taking SIPs, all the older SIP setup or instructions they carry on. That has been the practice of from mutual fund.
Okay. The other important point that you mentioned is that historically, as has been witnessed, is the first people to redeem the funds have got saved, but the rest of them have got themselves stuck in a situation like this. In that kind of a situation, say somebody had a horizon of just about 3 to 5 years, had been investing for the last 3 years in small cap funds. What should be an ideal strategy right now? Should one redeem their profits at this point in time? Would you advise them that?
Yes, I would strongly urge that, the way I keep saying, or, the right way for most investors is to gradually invest in the market, because market is very volatile. So that exactly like that, the reverse is just as much true. You should not wait for the last time, and you can't bank on the market for it to be in a great health and booming when you actually need the money. So prepare for it well beforehand. If you need the money 3 years from now for a non-negotiable goal, your child is getting into a college and you need all that
Yeah.
money. Get the first year's college money this year. Take the second year's college money next year. So you will have a lot of time and you will not never lose sleep.
Okay. And for those investors who've been looking to invest afresh at this point in time, we've already seen a dream run, 60-70% of an upside on the small caps in the last 1 year. Now with this directive coming in, somebody who was thinking for next 5 years, 10 years perspective on small caps, is it still a good enough time to start investing, or should one still stay on the edge?
Oh, if you are thinking of 5, 7 years and more, start investing. And when the market crumbles, feel happy that you will be able to buy more units as and when, as you are continuing.
Okay, okay. So, very important clarification coming in. Three most important points in case you are a small cap scheme investor of any mutual fund. One, if you are a long term investor, continue with your SIPs. That's a very important aspect, because even if the markets crash, your averages will come down with your long-term goals. Anybody invested in these small cap schemes over the next 2 to 3 years, in case you have an emergency goal that you need to pull out the money, start pulling out your profits right from now. Do not waste till the time the markets actually crumble. Start timing your exits even now at this point in time. Fresh entry still can be done, should be done in case you have next 5 to 10 years of a horizon, because in the long term we're only going to see the flows increase as is. Anything else, Mr. Kumar, that you'd like to highlight for all our viewers?
If you're on to a steady investment plan and you're in the accumulation phase, don't listen to all that we are talking. Just keep calm and carry on.
Okay, what about the large and the mid caps? Should one shift in case somebody is looking to shift portion from small caps, because this directive is largely for the mid and the small caps? Should one put money afresh? Maybe somebody is booking out profits. Where exactly should that money find a good place to be invested in now?
This is where I would say that, people should have an allocation plan when they are making, assuming that you are doing your SIPs and you are making, 10,000 rupees or 50,000 rupees or 1 lakh rupees every month. There are different scale of different type of investor. Or, if you are doing your 3,000 rupees investment and that is all that you have. I would say that, everybody's first stop should be at a flexi cap fund for a multi cap fund, because that is where the money is really spread. The benefit of mutual fund is that you diversify. So make sure that you are substantially diversified with your core investment. If you are investing in a small cap fund and if you are doing your 10,000 rupee SIP, make sure that it is not exceeding 2,500 or 3,000 rupees. Your substantial money is still in multi cap or flexi cap. That will ensure diversity at all times. Just remember that, everything is cyclical in the market. What is going up very dramatically will stop going up as dramatically tomorrow, and something which has been struggling will stop doing very well. And we see those turnarounds all the time. And as you mature as an investor, maybe diversify better. Make sure that you have, because all that you have is, you have complete control on how diverse you are, but you have no control on how well they will do. And you can have a great, I would say that having a belief and the principle that something or the other will always be doing well and something or the other will always be out of favor, which will also do well in future, should be the premise for your long-term equity investment.
Fair enough point. Very well taken, sir. Thank you so much for being with us onto this special edition, helping all our viewers to navigate through this moment of panic. In fact, there is no need for panic at this point in time. This is just a directive. Mr. Kumar really points out that in case you're a long-term investor, let this go, let this news pass by you, and you have your eyes firmly set on your long-term goals and continue your investments via SIPs into these specific schemes, even if there is a periodic correction that you may see after this long term of wealth creation that we have seen over the past many years into these schemes. There will be a good enough time for you to average out your investments. Many thanks, sir, for being with us.
Thank you. Thank you.
All right, and with that, we wrap up this very special conversation. Clearly, this is an unusual step that has been taken by Sebi, clearly mentioned by Mr. Kumar. A point of risk being highlighted by Sebi to Amfi. Amfi may be directing already the mutual fund companies to moderate the flows that are coming in, which continue unabated into the small cap schemes. This space, mid and the small caps, do look overheated. At this point in time, last 2 to 3 days, you've been looking at some correction really taking place. In case you are a small cap scheme investor with a short-term horizon, next 1 or 2 years, start looking at booking your profits. A long-term eye of 5-10 years down the line, continue with your SIPs. There may be some disruption from some of the schemes which may not accept some of your lump sum investments over the next few days or so, over the next month or so. Keep an eye out on that. This is the reason why they may be limiting lump sum flows at this stage in point in time. However, in case you're looking to book your profits and shift your money somewhere else, flexi cap, multi cap funds is where you should be parking your money next. Many thanks for joining us, but do stay with us on Business Today Television as we continue to get you such valuable advice from the top market and mutual fund experts to guide you where exactly and what should be the strategy amid the new changes that the regulators keep on bringing into the worlds of mutual funds.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
So guys, I'm here at the Energizer booth at MWC Barcelona, and behind me is a slew of smartphones, but one stands out. This is a phone that can actually charge your power bank and even any smartphone. It has a huge, I think huge would be an understatement, a mega battery pack inside. I want you to have a look at this phone and tell me what you think about it.